Bihani, the Executive Vice President and Fund Manager at Kotak Mutual Fund, joins us on the show. Harish, hi, good to be speaking with you. It's been long. Just to get a sense from you, this entire debate which everyone is having, is it going to be the year of a complete reversal from large caps of their underperformance, or is it going to be a year of the continued momentum in mid cap and small cap? What's your view on the same?
I think from a US perspective, it's very difficult for anyone to take a call whether it'll be a large cap year or a mid or small cap year. That said, if you longer your time horizon, think about the next 3 to 5 years, across caps, across sectors, there's enough opportunity in the market today, which is what market and the market participants have recognized over the past few years, and that has kept the market buoyant. So regardless of what happened in the past month when people got a little worried about the impact on mid and small cap due to some notification by the industry body or by certain other notifications. I guess on average, you have a decent medium-term time horizon. Things are looking fine to us. We have enough ample opportunities to invest, and we are looking for ideas all across.
Absolutely, Harish. Good afternoon. This is Vinny joining in the conversation as well. As for a long-term view, when you look at it, obviously you're saying there's a lot of ideas, there's a lot of potential, but where are these ideas, right? When you look at some of the quality names, they have seen a very sharp run-up as well. Or PSU side specifically seeing a sharp run-up. So is that something you would still look at? Is that something you would avoid? What's the thought on that?
No, as I said, across cap, there will be ideas in any market. You'll have to dig deeper. So our life becomes a little more tougher versus last year or a year before last. That said, if you look at specific segments, specific opportunities, for example, say the auto ancillary pack, the healthcare pack, the IT pack where things have corrected in the past 1 month or so. So across caps, across sectors, there are opportunities. We'll have to dig deeper. We'll also have to longer time horizon, largely because a lot of the returns have been upfronted in the past few years. So we'll have to longer our time horizon, and that is true for the investors too. So you can't presume that the returns that we have seen over the past 1 year, 3 years will be similar in this particular year. But as you longer your time horizon, things should be fine. So that is what we would advise to investors.
You talked about auto, you talked about how IT has seen a bit of a correction and probably looks lucrative, but what's your view on financials? Because even in your top 10 holdings or your top sectors, I'm not seeing any presence of financials as such. Are you going complete underweight there?
No, financials, again, one has to be very selective, specifically from a 1-year view, because there are a lot of moving parts in terms of how the system liquidity has been tight. Again, it's been well covered. There have been diktats from the regulators to various financial companies. There's a pressure on NIM, there's a pressure, there's an increase, there's a likely increase in credit costs in the upcoming year. So things that has to be extremely selective in the entire financial space from a year's perspective. That said, when you think about the entire journey of India from a 3.5 to a 10 trillion, there'll be many financial companies will become very, very big in size, regardless of the size today. So we are while we are navigating the short-term pressures on a lot of financial companies with regard to credit card, etc. The big picture is that how do we position our portfolios to have the right set of opportunities where companies will become very, very big in size over the next 3, 5, and 10 years. There are many financial companies which will become very big in size. So that's our focus, and that's what we are doing at this point in time.
Take your point, Harish, that you have to be selective, but the universe itself is very large, right? So just help us understand what exactly are you looking at? Is it NBFCs? Is it those microfinancing institutions? Is it PSU bank, private bank? Is it the capital market ancillaries, insurance? Because there are a lot of pockets, right? So help us narrow it down a bit at least.
Private banks, again, 1 year, difficult to take a call, but private banks, the opportunity size is large and they are well diversified across sectors, across segments, and they will continue to do well. So you'll have to pick and choose the best amongst many, many opportunities over there. You have a lot of the entire opportunity coming up in new segment, which have got listed over the past 3 years, as you pointed out, in terms of the opportunity in the entire capital market space, many opportunities over there, where again, as the country become big in size, the market caps become big in size, many of those companies will become very big in size. In some cases, you have monopoly or duopoly business in those segments. Life insurance, again, have seen a lot of volatility in the past few years. Things are stabilizing over there, especially with regard to the regulatory headwinds that they had seen. So things are looking up over there too, especially in the near term.
Okay, and Harish, what's your thought on the real estate sector? Is that something you would be looking at? We've seen a lot of expansion, focus coming in from these real estate names, and obviously we've seen a run up there as well. But overall thought on the real estate sector, is that something you would look at for the long term?
We are looking at it very actively. We are very constructive on the entire real estate and the ancillary building materials, light electrical space. Again, one needs to have a slightly medium-term time horizon on the second-order impact of building materials and light electrical. But on the real estate, at this point in time, it's amongst the best cycle that we have seen over the past many years now. And that cycle seems to be continuing amongst the large listed developers or even the mid-sized listed developers. The launches are being taken up in a hurry, so they are selling off their launches in very short time. So this is amongst the best time that we have seen, and this has significant positive impact on the cash flow, leads to a virtuous cycle on more incremental additions to their kitty in terms of the overall square footage that they are building up. So we are in a virtuous cycle right now, and it seems that it still has some legs to go.
Okay, so but where is that space where you're trimming positions as well or redeploying capital out of it into other sectors?
I guess we don't take a sectoral call when we're trimming our position. It's more to do with specific names, specific areas where we think that the headwinds will last for beyond 1 year. We take off money off the table and redeploy in ideas with similar valuation where we think the upside is decent, both from a 1 and a 3-year perspective. So we are doing this across caps, across companies. We think that the valuation, or in some cases, the valuations have moved sharply ahead of the fundamentals, very difficult to justify. It could be because of certain technical factors. It could be because of low liquidity. In those cases, we try and take money off the table. We try and be disciplined in such cases and not being carried over by what's happening in the market, especially in the near term.
Okay, and can you discuss any of those names in terms of where you have added position or trimmed position? Because I see the top 10 holdings in your list, but any additions or deletions that you can talk about?
I guess our fact sheets are publicly disclosed every month. So investors have very decent understanding of what we are doing. But as I pointed out that the area, the sectors that we are constructive, we are adding more names wherever we think that the valuations are run off very sharply or where we don't believe in the company, especially where earnings headwinds will remain much beyond the next 1 year, we are taking money off the table.
Harish, one thing that I want to talk about is in terms of the chemical sector or, the chemical names. What's your thought on that one, because last year, obviously, we've seen not a great performance coming in from these chemical companies. But, still right now, again, we saw a bit of a run up and then now it's what comes in that, China, there's more dumping going to be from China. So is there a concern coming in from the chemical side? Because you do or have some percent of holding in the chemical sector as well. So what's your thought here?
I guess it's a useful reminder to all investors that several sectors are cyclical. Chemicals was presumed to be a structural sector, and China plus one took up all the chemical stocks to a valuation which was not seen in the previous cycles. Valuations have corrected in some names. It still should correct according to our understanding. But it's extremely good reminder to all the investors that several sectors are cyclical, so just be careful, which is what we discussed earlier, that one needs to be very disciplined and take money off the table where fundamentals are running much ahead of expectation. I guess from chemical sector specifically, it'll take some more time before things come back to normalcy. China is still expanding capacity. In some cases, they're adding up newer capacity, which was not the base case, say about 2 years back. China was not supposed to add capacity as a popular narrative. So it's happening as we speak, which is a change in the thesis. Investors are still grappling with how to think about China expansion and how that will impact their earnings and cash flows of the specific companies. and which is why we are seeing that stocks have corrected. And I guess there's some more way to go before one gets constructive in general on the sector. Apart from that, you have specific sectors or specific companies in that sector which are looking fine. So we are adding some of those. But in general, on the sector, one needs to be still cautious.
Okay, thanks so much for making time and speaking with us, Harish. Appreciate your time today. In fact, on that note, we'll slip in.
If you like this video, then like, share and subscribe to ET Now.